Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who will be on in a couple minutes. Good morning, Jacob. Good morning, Patrick. Good morning, Davey. Good morning, Connor. Good morning, Ramsey Fall. Good morning, good morning, good morning. So, how is everyone doing? I was looking at CVS earnings, a nice big gap up today. So they handily beat. Mortgage applications coming in a bit stronger. We're just going to get right to it so I can get Bob on here. Actually, I was surprised. That was a pretty big jump. Nice pullback in mortgage rates. I'm going to be interested once that falls back below 5. We got reminder 15 minutes after the open. We got the S&P Composite and Services final numbers for July, and at 9 Central, 30 minutes after the open, we have ISM non-manufacturing PMI. Gonna be interesting to see how the employment index is faring with that and the non-manufacturing prices. We have Harker. We have more Fed speak. We've had a lot of Fed speak. We'll get Bob's take on all the Fed speak, and there's more today. And then we have the crude numbers coming out at 9:30. Then it's quiet unless something unexpected happens. So we'll see. Pretty mixed to slightly green. I'm actually watching for the rotation back up now. Rotation back up. We shall see. By the way, the 50 basis point hike is raising. I mean, Fed speakers have been stressing that they are not done, and the 25 being pulling back. So going to keep an eye on this moving forward. But remember, this is not until the 21st of September. So lots to go, and we still have Jackson Hole at the end of the month. Slight dip back into negative gamma territory, but not much. But that can also amplify moves to the upside with a little extra juice. So do keep that in mind. And with that, first, if you're new and you want to hear what Bob has to say, please do consider subscribing, hit that like button. Longer term viewers, leave some comments and like the videos. Now here we go with the magic Bob button.
What's up, guys?
Hey
Mike,
Bob, what are you doing here this morning?
I like negative gammatory,
Negative
which is
gamma. Did
almost
I
like
not say it right?
no, you said it. You eventually said it. You said negative gammatory, and then you corrected yourself. But I like negative gammatory. You could also say positive gammatory.
Should I just do that from now on? Should that be one of
Yeah,
our? Should we trademark that as path trading? We could have gamatory
yeah.
results.
I think you should copyright it because it's absolutely going to catch on. It's
It is.
fantastic.
All right. It's going to go viral, isn't it? This video is now going to go
Yeah,
viral because of gamatory.
because of gammatory. That's correct.
Good morning options. There's morning magic Bob. You're magic Bob now.
You have talked up that magic Bob button so much.
So what's your thoughts with everything going on? Oh, by the way, let everybody know you won't be here Thursday afternoon.
Yeah, I won't be here Thursday afternoon, so I told Mike if it was okay with him, I would check in this morning, and I'll check in tomorrow morning as well, just to kind of keep things flowing. But yeah, it was OPEC is on my radar today. They announced a production increase. So as of today, they've actually taken back the entire production cut from 2020 for the most part. That's an interesting development to me. I saw a tweet by Amina Bakar, who is the chief OPEC correspondent, as well as a deputy bureau chief for Energy Intel. And I thought her quote was perfect. How do you not do anything without not doing anything? And it's a 100,000 barrel increase. And that's what they're doing is a 100,000 barrel per day increase. And that is really virtually nothing versus the deficit that they claim is still in place. The increase in demand predicted by OPEC is lower in 2023 than in 2022, but it's still there. So if you got a predicted demand increase of over, well, somewhere in the range of, they said it's going to be 70 to 85,000 barrels a day, and then you increase production by about 100,000 barrels a day, there is virtually no room for error in that. So it's not much of an increase at all. And yields screaming again to the upside when you look at the yield curve. Yesterday we had basically a 16 basis point increase in the 2-year, which is very large to get in one day. And today we've got another 4. So yields are higher again across the curve, meaning that people are starting to take the Fed seriously. I just got a really important call. I'm going to put you on mute for a second.
All right. All right, I've been muted by the big Bob. So he was just mentioning in the yield curve, by the way, still back down to this negative 31 basis points. That is pretty substantial. So yeah, they are starting to take the Fed. I mean, the Fed's been banging the drum since last Friday with the op-ed, or the interview, I should say. The interview, then we had the op-ed, we had everything going on. So lots of Fed banging the drum. Please take us seriously because we've lost all credibility. So that's where we say. Hey, George, welcome, welcome, welcome. I tuned in, saw Bob, and thought I was watching an old video. No, Bob is here live, and this is the Wednesday, August 3rd edition. Good morning, Anissa. So what else, Bob? What else? What are your thoughts on the overall broad market?
Well, I think it'll quiet down now today. We had 2 down days in a row, and now we have not even recovered yesterday's move so far, but it's really, really early. Earnings were really good today. PayPal was good. CVS was good. So I think it'll calm down a little bit till we get non-farm. Non-farm is going to be the next shoe to drop. You've got, excuse me, estimates on non-farm payroll so far. I'm sure you've looked at those already, but let me see. Let me get to it here. That's what I'm looking at next. So the non-farm payroll estimates are for about 250K, somewhere in that range, and unemployment rate expected to stay the same. So it's really interesting to look at when you look at non-farm right now. One of the guys I follow quite a bit was on TV the other day, and he basically said that good news is bad news is overall bad news. So whenever we're in a good news is bad news kind of scenario, that's overall bad news. So if we get good news on payrolls, that means people start to believe that the Fed is going to be continually aggressive because the one part of their mandate, full employment, remains in place. So they can continue to be more aggressive. I suspect the 50 basis point hike indicator that you just showed from the CME group, if we get a strong non-farm payrolls report, that'll likely creep up, continue to creep up. And the Fed speakers will start to point to the most recent jobs data, shows that numbers are still strong. Now, we had the JOLTS data, and JOLTS jobs openings fell, and the quit rate fell as well, which means that people have fewer jobs to choose from. And not only that, people are feeling less secure quitting their jobs. That's interesting in and of itself because the quit rate always shows that jobs are plentiful. That's what the quit rate means. So when the quit rate is high, that means people are comfortable, confident quitting their jobs because they know they can go get another job or they've already got another job lined up. It's one of those two things. So from that perspective, the quit rate is much more interesting to me than the JOLTS jobs opening. There is talk that the JOLTS jobs opening has a lot of phantom jobs posted to it, and the number's not really that reliable. So I think from here, the Harker speech will be really interesting. There's more Fed speak during the week, and I think you're going to continue to see the same thing from the Fed speakers, that we're still committed to inflation, we're still committed to raising rates, and those kinds of things are actually really important to pay attention to, because prior to the last couple of days, the yield curve was basically saying that the Fed was virtually done or that a pause was imminent. I'm not calling it a pivot because that's not a pivot. And if I call it a pivot, you have to drink, and it's too early.
Yes, it is too early. Now,
who was it? Gio yesterday? Gio in the live stream was talking about he loved the one-word drinking game. So I think we'll do that at the beginning of every podcast if I know what the subject of the podcast is going to be. This week's podcast is a very famous person, Mike Arnold, who's going to be on this Friday. So you'll be able to hear a lot of Mike's longer-term views that he isn't necessarily able to cover because I talk too much.
No, and my I'm gonna just blow it. My theme is stocks always go up. Ah, there you have the podcast. You don't even have to tune in now. Stocks always go up. There we go.
Hang on, I got to look at DES futures because I got to see if Coco is buying at my target level yet. And I don't think we're there yet.
We're not there, but we are rotating back up. Let's see. It's 5 o'clock somewhere. Yeah, it's also 5 a.m. somewhere. So,
Mhm.
uh,
Also, I was on TD Ameritrade a little while ago, and one of the things they told me they wanted to talk about is Bitcoin, and they didn't. But that Bitcoin pop is really losing steam. Now, I'm still long it, and I'm long in the futures. This is not Bitcoin Cash kind of a situation. I'm long in the futures, but we did get a cross on the rotation zone. It's still not quite a rotation zone, so I still like the trade, but it really isn't even much of a rotation zone right now at all.
Bitcoin. Well, let's see. Let's see. I mean, we have
Bitcoin only goes up.
everything only goes up, except for you can't say that though for currencies because it only goes up versus. We're in the everything always goes up
Hey, I
mode.
got to get this. I'll talk to you guys later.
Okay. Let's see. Are you? See, there he goes. All right. Bob had to jump off. Well, you can ask Jake. You can ask Bob tomorrow morning if he's short the yields. That was a valid head and shoulders pattern and a valid on the just the again. We are expecting. I said we get the pullback in here, and you're getting the pullback. And this is a long way. If you're worried about a stop being hit, you're a long way from a stop being hit. Again, this could be a multi-week pattern to the upside. So, especially if the market rolls over again, let's take a look at everything though. Again, this is generally a more bullish move now, holding up, letting the rotation zone catch up here. The only thing that tips me again into short-term bearish mode, this is like a triple top area. I'm just watching these levels for stop reduction because we're into a clear path move. But the only thing is a key close below 40.80 roughly. And then the 40, 49, 25, 40, 33, 75, and 40, 18, the major level. And that would be a minor pullback. Other than that, with it's holding the 4-hour rotation zone, remember, watch it on a close, especially the 4-hour daily and weekly. Pay attention to it on a closing basis. So you see here, you can dip below it, but keep closing above it, and now the rotation back up. So what am I keying off of today on a continued up move? I mean, we still have Harker talking. We still have numbers coming out at 8:45 and 9. We're still in a trading range in here. So what will I be focused on the upside with, again, this is short term. I will be focusing on this key little gap open. 41.37, and then above that we have the 41.47. I'm still using, I updated the harmonics this spike high, and these are my minor harmonic levels. Remember, Bob has a long target at 41.50. I got 41.55, 41.63. How did Bob get his 41.50 for that other trade? It's the end of the clear path move, which is to this key gap open, 41.50.75. So then we are trading into a big consolidation area before. So there is plenty of overhead resistance up in here. And this is prior resistance becoming support. So there is a lot to chew through up here on any rallies, even to those levels, 41.55, 50, 41.63, 75. Again, the only thing that turns me to very short-term bearish is the key close below 41.80.50. On the NAS, still, this is just a key breakdown level. No, I mean, you two technically have this double top, and this is almost getting to triple top territory. I would just trade this into the clear path using 12.763 as a first target, 12.603 as my major target. Why is that my major target? Because it's the prior breakdown zone. Again, no close below the 4-hour rotation zone. So again, on these markets, I don't want to say and again, and again, and again. So I just said it. Watch for your first warning sign that we're getting more toppy without a higher time frame topping pattern is if we do get a key close below these 4-hour rotation zones. Until that happens, again, short-term bullish. Damn it, I said it. To the upside, remember, cycles still toppy on the 4-hour, toppy on the daily, toppy on the weekly, but no great long-term topping pattern just yet. So unless we get some earth-shattering news that does a pretty big sell-off or something that triggers unexpected, I can't go more than short-term bearish should we break down. Dow coming down, hitting this second target on this, also then triggering this little double bottom. Why was this not a triple bottom? Just a little learning lesson. Because these two bottoms reverse this move and you see the targets in there. This was already triggered, already hit stop reduction. So on a follow through into the open, 32,585, 32,619. Then I'm going back to this 32,700 area. You have the breakdown zone right in front of this 32,680, but these highs 32,709. So that's why I'm saying it's a 32,700 area. Above there, and the Dow's actually being a little weaker with the close below the 4-hour rotation zone, but I'm still more so paying attention to the NASDAQ and the S&P. By the way, if the Dow does roll over, I'm keying off this final target, 32,666 with the rising 50 period, and then a breakdown from there is 32,50 area. Let's see, Russell next level's 1910, and then major is about 1919 to 1923. This is now a triple top, so I am not utilizing these targets whatsoever. I will just be watching for the move close below the 4-hour rotation zone, and then a breakdown from roughly, my breakdown zone on the Russell is, again, about 1870. Let me revise this a little lower, about 1870. Other than that, just grinding higher. Again, 4-hour, daily, weekly cycles are at the top, so I'm prepared for short-term rollover moves, but no great signals just yet. So I got to stick with the short-term bullish case unless we get sharp reversals into the open. Already looked at notes, continued pullback. Nothing I'm really doing, watching for some key support at 1920. But it's just a longer-term pattern with this nice pullback play, testing the prior breakout zone. So here's the resistance, coming back down, breaking above it, testing it again, and now retesting it. And remember, you can have, this is a very big pattern. And the stop level, technically, for this whole pattern is 116.19 on a closing basis. So your early warning signs will be if it starts really breaking below about 119. Crude, I'm just trading off key support 93.50, key resistance 170. Other than that, there was this short little thing yesterday that was nearly impossible to trade unless you just played momentum because it hit. I said I was watching 4-hour on this move earlier. We didn't get to cover it last night due to technical, but the 4-hour close was above there and it went to the second target. So there's nothing to trade there, and it's still caught in this consolidation. You want a short-term breakout zone, I'll be going off 96.50. We go off 96.50. I'm using the prior harmonic about 98.80. Breakdown zone, again, is 93.50. Let's get to some other stuff I know people want to look at. Just Tesla's pre-market up. Remember, this will probably turn it into a triple top. But if it did break down with momentum below 878, you got 885, 843, 832. Again, everything's still in momentum. Can't get overly bearish on Tesla before it's below the daily rotation zone, and that breakdown would just take it into the rotation zone. But my major overhead resistance is 942 to 954. Really favoring that 954, and above that is 975. We got the spiders and the Qs. And then I will get going with stuff. Spiders pre-market. This has turned into just a horrible sideways channel with essentially a triple top right there. So nothing to trade there unless you break down your mic level. I'm watching now on the spiders is 408. Key resistance, we're at 410.40 pre-market. Key resistance is 412.85. Above 412.85, 414, then 417. Breakdown below this is still the gap fill target, which is back to 406.04. Qs, again, everything is tactical trading. Qs still have a potential double here, but looks like we might get that move up to cause it to be a triple. The triple is right around 317.05, so you get up there. It's then a triple. I will put these levels on in case we do trigger a sell into the open, and I'm going with the conservative just because we are at the topping area going into key major support, and that would only be on a close below 314.85, 308.52, 306.91, 305.18. But that again might not trigger, turn into a triple top. Breakout area I'll be keying off of is about 318. 318. You can use reverse harmonics if you're interested, but above 318, then target 319, then 322 to the upside. If you want a closer target, use the reverse harmonics, which you'd put on from this low yesterday to that. You go backwards in time if you were looking for your small little micro levels. Where else? Does anybody have the VIX? Again, pre-market is down, so the first thing will be the gap fill, but can't get overly really bearish until the VIX, and this isn't just for today, gets above about 24.30 today. If we start trading below right where we're at now, my next targets are 22.37, and I will stay on the bullish side, and then a return to this low area. So that's where we sit. So, all right. Hey, Rich, good morning. Hey, Lauren, good morning. Now I'm just getting back to sensible comments. I gave you my levels on Tesla. It can always run back to a 1K. I mean, everything's in back to La La Land. And is buying the junk squeeze stocks when Tesla is technically the junk squeeze mega cap stock. Again, 975. You get a close. I'd really be watching it on a closing basis above 954.27. You get a close above there. That technically favors even a higher run than 1,000. But the next significant target area would be 1,000 to 1,019. You are welcome. I will talk to everyone after the close unless something major happens. Again, have a great day trading, and we'll talk to you later.